We're going to be talking about how to avoid hearing from the IRS and Charities Bureau. So we'll have a few topics to go over. We're going to go over some Form 990 reporting issues, some audit triggers for the Form 990. And now when we speak of audit triggers, I'm a task person. I know you do both, Elaine, but when we mentioned audit, I'm not talking about audited financials. I'm talking about actual audit from like the IRS or the New York State Charities Bureau in this instance. We're going to touch on a little bit of the New York State Charities Bureau requirements, BOI reporting requirements, tax credits pretty briefly, and also the TCGMA. There's some expiring provisions there just to be aware of. And then finally, as we always end with, just some resources that might be helpful for you. So we'll kick it right off with the common Form 990 reporting issues. And it seems like we'll jump right into our first polling question. So first off, what is the gross receipt threshold for filing a Form 990N? So a 990N is the postcard online. And our choices are A, 100,000, B, 75,000, C, 50,000, D, there is no threshold. Anybody can file the postcard. So let me know what you think. Hopefully everyone's back from their break. That was kind of quick jumping into the polling question there. And it looks like our mix of people too is executive directors, board members as well. So hopefully I think these topics will be pretty interesting to everybody and kind of hit home on some topics with everyone. So what do we got here? All right, looks like our polling answers, majority picked C, 50,000, which is correct. So I just put that in as to kick us off, just because it actually is a very common question that we do get, especially new charitable organizations that are starting off, and they might say, oh, I started this organization, but we haven't really done anything in the first couple of years, so we're not going to file anything. And we always say, like, well, even if you don't have anything, if you're under the 50,000, like, make sure you're filing that postcard. After a few years, you could get your all that work would go to the wayside because you could get the exemption revoked.
After 3 years, if you don't file the note card, they're gonna take away your tax exempt status.
Yeah.
And then what you have to do is you have to either, if it's within a year, you have to file the 1023 EZ again, which is certainly the best option. Or if it's gone over a year, you have to completely start the process again, filing the whole 1023, which is a very large form. It takes a lot of time and expense. So filing the note card, if there's any small organizations, it's really an important thing to make sure you watch that. And then the second thing, which actually happened to one of my clients, is make sure when you finish the filing at the very end, you get the confirmation back that the form has actually been filed. Because I had a client that never got the confirmation back. She exited out of the program, and now she has to, and a year's gone by, now she has to file the entire 1023 for an organization that's very small, but really provides, a really meaningful service to the community. So it's really important.
Yeah. And a lot of people are like, I can just wait a couple of years too, and then file it, and then I'll be okay. I just wouldn't take that chance. You went through all that work of establishing the charitable organization to begin with. So no sense in, risking it, basically. So anyways, those are the smaller organizations, the postcards that you can go ahead and file online, and pretty easy. It takes 5 minutes and you can get the confirmation right there. Make sure you do. It takes, I think they say it takes 7 minutes to, to give you the confirmation after it's approved. But some other filings. So if you're above that $50,000 limit, the next level of filing is a 990 easy. And as long as your receipts are under the 200,000 and assets are under 500,000, this is kind of abbreviated form, a little bit easier to complete, not as much information required than the full Form 990, which I imagine most of you that are listening to us today probably are involved in a little bit larger organizations and file the regular Form 990, which is required if you have the receipts over 200,000 and assets over the 500,000. So we'll mostly be hitting on the full Form 990 just because that gives greater details about the organization and things like that. And we kind of want to hone in on items as executive director, as an employee in a charitable organization, as a board member, you should be concentrating on and making sure you're reviewing thoroughly with the form. And then also just want to mention there are also 990 PF form for those private foundations. Okay, so what are the due dates for the forms? So 4 months and 15 days after your year end is when the initial return filing due date is. For example, calendar year 12/31, year end, you should file by May 15th. If you can't get all your information gathered and together and approved and reviewed by the board and everybody by that date, there is an automatic 6 months extension that you can apply for. And that'll give you, for example, if you're a 12/31 year end until November 15th. And you can see on the chart here, just all the due dates, but it's basically 4 months, 15 days, plus an additional 6 months if needed. But don't miss those because there are penalties for late filing and they don't skip out on sending you those notices at all. You will get them. We have been, knock on wood, somewhat lucky with being able to get charitable organizations out of the late filing penalties if there's a good reason. The most common I have is, medical reasons or, the executive director's out or, there's just some major unforeseen circumstance that the organization went through. So the IRS isn't trying to get you and penalize the organization and have them pay all this money, but they do want to make sure that it is important that you're not letting these filings go past, with the extension, you get 11 months and 15 days. So, I mean, it's a long time. So get those filings in. As you can see, the penalties for a small organization, $20 a day, but it can be up to $12,000. That's pretty substantial for a smaller entity. And for a larger entity, it can be up to $60,000, or $120 a day. So
I've also had, we've written a letter for an organization and IRS came back and said, no, we're not gonna accept it. So we wrote another letter, a little bit stronger, more information, and talked a little bit about the hardship and some of the other things, and IRS did accept it. So just because they come back once and say no, doesn't mean you shouldn't go ahead and pursue and ask again.
Right. Yeah, I've had that as well. But I will say too, if you're constantly filing late year after year after year, it's not gonna fly.
Nope.
They'll catch up to you eventually. So just get them in on time. This is kind of a not really a big one anymore because I think most people are used to filing electronically. But obviously that's required for any form now. All right, so digging a little bit further into the actual Form 990 preparation. So as you know, Form 990 is a pretty lengthy form. The core part of the form is 12 pages long. And in that, there's about 4 pages there of just questions with different statements. And, those questions lead you to additional schedules. And there's a Schedule O that asks for additional descriptions and things like that. So, on top of the core of the form, the checkboxes and the numbers, there's also a lot of descriptions and additional information that the IRS is requesting about the organization. So one item that I do want to make sure that when you're getting the form, once it's prepared, as a board member, as executive director, as the CFO, whatever your position is, make sure you're reviewing those statements and descriptions. A lot of times, especially in the tax preparation software, carries over from year to year. So it's just default, whatever it was last year, it's going to be the same. Well, things change within the organization. Your program services might change a little bit, and especially depending on how detailed you get in those statements. Sometimes we have some of my organizations are listing like we did, 10 programs of this and served, 350 people each year. So they're pretty descriptive on it. So just make sure that you're checking that each year that is really true of the activities for the year. And if there's any updates, make sure those are made, especially your mission statement's really important. Should be reviewing that and updating that as well. Make sure it's accurate, just because it was right one year, maybe everyone missed it. Maybe there was a spelling error or something, or you don't do that program anymore. Just make sure you double check that. And these statements and descriptions are really important because especially readers of your Form 990, this is where they're getting a lot of information on what the organization is doing during the year. That's page 2 of the Form 990 lists your 3 largest programs during the year. That's a great place where it informs donors of what most of the money is going to. So be descriptive as you can, make sure it's thorough, and just review. I urge you, one of the main areas to make sure you're reviewing that when you go through the 990. This may seem pretty obvious, but contact information. So right on page 1 of the return, verify the organization's address and telephone number if they have changed. I have various organizations that actually don't really have a physical address. It kind of changes with whoever the president might be of the year and things like that. So make sure that whoever the current principal contact is, that's who should be listed on page 1. That's who should be signing the form. And I say that because a lot of times they're like, well, last year, during this 990 period, it was, person A was the main person, but they're not involved with the organization. Now it's, new person B. Well, that person that is the current contact should be listed on page 1. This is basically where the IRS is looking. Like, if we need to send you a notice or a letter or whatever, where are we going? Where are we sending it to? Who are we reaching out to? So just make sure on page 1 of that Form 990 where it's listing the contact information and the person that it is most current, recent.
There's a couple questions, and if you guys are ready.
Sure.
So one is, my 501c3 organization has filed 990s and Char 500s for 20 years on a cash basis. Sorry, different accounting firm. We received funding from New York State for one of our programs, and we're informed that the state now requires filing on an accrual basis. So we had to go back 3 years and file amended returns. Not sure if this is now the state's policy on all Char 500 filings.
I'm gonna let you handle that because it's part of your presentation,
Okay.
but
We will hit that in about 10 slides.
Yeah.
So, yes. Yep. We will touch on that more, but that is true and correct.
I have one more question. So Anita, we'll get back to you. It's going to be part of the presentation.
Yes.
If an organization makes a donation to a 501c7 tax exempt membership club, is that donation tax deductible?
This is a very common question that we get, and you can actually look on the IRS website to see what donations are tax deductible, and they are for 501c3 charitable organizations is what an individual or company can deduct that for, not a 501c7. I should have probably add that to the resources, but you can go online and see exactly what organizations are 501c3 and their exempt status is still active, and they're up to date on all their filings and things like that, that somebody can actually deduct the tax contribution.
And that goes for Chamber of Commerce's too. Very often a Chamber of Commerce will set up a foundation that's affiliated with it so that any charitable contribution and fundraising activity goes through that foundation versus the Chamber of Commerce. Good question.
It is a good question, and kind of side related for some of my corporate company clients. We try to say, are they really, when you're donating sometimes to maybe a 501c7, is an activity where your name's getting advertised, and can we say it's marketing and advertising, and you can deduct it as a business expense that way through the company? That might be another way to get your deduction, even though it's not a charitable organization for a company. So just gonna have a side note on that. Okay. All right, so back to the presentation. And keep the questions coming. It's great to have the interaction and everything like that. So other IRS filings and tax compliance. So this is another area of the Form 990. A bunch of questions here, and it basically is asking about other tax. Well, part of it is asking about other tax forms that might have been filed during the year. So, for instance, they ask the number of Form 1096s that were filed or are being reported for the organization for that year. And same thing with the number of W-2s or the W-3s that reported. So the Form 1096, we touch on this every year because it's really important and a lot of people still miss it. A Form 1099 is issued to abbreviated description, but to your vendors or contractors that perform services for you over $600 throughout the year. There's other exceptions, you know, if they're incorporated or another tax exempt entity and things like that. But as a charitable organization, you should be issuing those Form 1099s to those vendors if they fall under the qualifications. So that's what the IRS is asking this. Are you still, you know, are you issuing it for these contractors and things like that, following still the other IRS rules? And then they ask the number of like W-2s as well to make sure that if you do have employees, you're obviously issuing payroll wages and things like that. Some other items to check in this section, make sure the number of voting members appears accurate. That tends to change at least by 1 or 2 each year, you know, depending on who's active and who's on the board or who's a voting member. Also list various policies in this section, whistleblower policies, and things like that. So make sure you're reviewing this piece just to make sure that yeses are always good for the IRS. Not that it's not that all of them are required and necessary, but you know, see what policies you have, see if there's anything you might want to enact if you don't have it, or you know, it might even prompt you as a board member to be like, oh, we haven't looked at this policy in a while. We might want to just go back and look at it or make sure we're disclosing this annually. Once again, going back to those statements, I think that's an additional is how often you look at some of these policies and disclosures and things like that. So just reviewing those to make sure that everything's up to date, nothing's changed, and kind of as a prompt for you as a board member, executive director, whatever, to kind of revisit these policies year to year because they are important.
And let us know if there's any changes, because sometimes we might not be aware that you changed a policy or added a policy. So we may have, like Shannon said, answered like it was the previous year. So it's really important for you to look the 990s over and give us feedback. Any questions, comments, corrections, changes that need to be made.
Right. Yeah, I mean, I like to review the minutes. As a firm, we usually ask for all the board minutes for the year, but you know, it's a lot that happens in your year. So it's stuff that can easily be missed by us when we're not in your meetings throughout the year and things like that. Okay, and this is a big question item that I get every single board meeting when I'm presenting on the Form 990 or even giving it to the board or the executive directors for review, the board members listing. So there's a section on the Form 990 that has your reports, the board members. And I want to just reiterate that this is for the board members that were active during the period of the reporting. And anybody that was active at any time during that reporting. So for example, the president, vice president, your executive committee might change every year. Well, you're still reporting those people that were active during that year, even though next year when you're submitting the form, you're like, well, this isn't the current board. No, it's not. This is the board for that period. Also, if your board changes, you know, halfway through the year, if there's people that might only come on for a couple months and leave for a couple months, make sure you're just reporting all of them. It's really nice when my clients like keep the track of, you know, this person came on in January, they left in July, and I have that trail. Rather than me once again reviewing those board minutes and seeing like, all right, who was present, you know, for this March meeting and this June meeting, and oh wait, they weren't here in September, you know, kind of thing. It's a little bit time consuming, you know, for us to kind of go through that. So just make sure the board members you're listing whoever was active at any time during that Form 990 period.
Okay. Next, we're going to talk about the top 10 audit triggers for a Form 990. So Shannon talked a lot about the questions that are in the form. We're going to talk more about how they affect your organization as audit triggers. But first, we have a polling question. Has your organization ever been subject to an audit? Yes, yes, but we ignored it. No, no, but we've been lucky. So the polling questions are coming in, but in the meantime, you know, how many of you have received a notice, an IRS notice in the mail and just panicked, like, oh my God, now, you know, what are they questioning? What have I done wrong? Your blood pressure goes up, your anxiety's through the roof. Our recommendation first is take a deep breath. It's probably something that can be resolved pretty easy. And then contact us. Let us know that you've received a notice. And then what we request, you send the entire notice. I don't know how many times I'll get the first page. And then I have to go back and say, can I have the second, third, fourth, and 10th? And we really need the entire notice because it gives us a lot of information that we need to see. It has a lot of clues as to what the issues might be. So polling questions are in. A is yes, there's 22% yes.
I'm surprised it was that high.
I know, but there could be other, other audits like workers' comp audits
Yes.
and
Sure.
payroll tax audits. Yes, but ignored it, okay? I hope you didn't ignore it for very long. They're pretty relentless. No, which is great. You know, it's really good. We're gonna talk about some ways to help prevent that in a few minutes. And no, but we've been lucky. Which, yep, there's some organizations out there that have been lucky. So starting off, the top 10 audit triggers, and we're going to go through each one of these: filing an incomplete return, acknowledging the diversion of assets, acknowledging prohibitive political activity. Number 4, unrelated business income. Number 5, acknowledging excessive benefit transactions with disqualified persons. And when we go through some of these, you're going to be a little bit surprised that you might recognize some of these and should be reporting them. 6, unreasonable compensation. 7, foreign grant activities. 8, fundraising income and expense discrepancies. 9, non-employee services, but no NEC. 1099s, they're important.
Mhm.
IRS matches.
Yeah.
And number 10, loans to disqualified individuals.
Yeah, and we didn't come up with these off the cuff. These are actually from the foundation group, which is a great resource. We have it listed at the end of our presentation as well. So if you're wondering where they came up from.
So number 1, filing an incomplete tax return. IRS wants information. That's why they made this form so long and so many questions. So they really want to see a complete and accurate return. So filing an incomplete tax return is more common than you might understand or know. This happens when a person filing the tax return might be a volunteer of your organization or maybe a tax professional. It's not really familiar with not-for-profit filings, and especially with how complicated the 990 filing is. Make sure that all the schedules are checked off and completed and attached. So in all those lists of questions, very often when you say yes or no, if you look at the detailed description, it's going to lead you to another item that you need to either complete or give details of. So documentation is, I see Angela Janik there. Documentation, and not only in audit, but also in tax. This doesn't mean that every single incomplete return will be audited, but it might lead to them contacting you for more information. So you want to make sure it's as complete and there's nothing that's left out. A very special note is the IRS treats an incomplete return as if it was never filed. So that goes into the penalties. Yeah, so they don't, the return just sits there. They'll send you information. They want the information. In the meantime, your return is late. So it's really important, again, for the person that says they ignored the notices, make sure you pay attention to these notices. Number 2, acknowledging diversion of assets. So this is on part 6 of the 990 in the governance, management, and disclosure section, line 5. Did the organization become aware during the year of a significant diversion of organization's assets? So what this question is asking is, was there any embezzlement? Was there any funds that were transferred to someone and diverted for a different use or inappropriate use? So it's important they want to know. I mean, if there was something that happened to your organization, you have to be honest. There was a diversion of assets. We found embezzlement. Answer yes to the question, but then turn around and say what you did to prevent it and what's happening in your organization. So if you don't give the detailed description, IRS is going to ask why.
Yeah, I've had this with clients, and obviously everyone wants to avoid answering yes to it because they think it's an audit trigger, but you have to be honest. And like Elaine alluded to, like the most important is being descriptive on your description. And we didn't end up getting audited because we checked yes. We basically gave the description of yes, this was caught and this dollar amount and this what, they ended up getting repayment returns and stuff like that. But just all the details that you could provide them with would be able to, kind of satisfy the IRS and hopefully prevent that full audit going on because you provided the information up front.
Yeah.
And, as prevention is always the best. So I urge you to listen to any of our fraud seminars or presentations that we put on here at Dannible and McKee. They are very thorough in what to look for and how to prevent it and things like that, because obviously that's better than having to report after the fact.
And never think it can't happen to you.
Right. It's
I don't know how many times I've heard, oh, no, that's not us. I trust that person. That department works perfectly. We have no issues. You don't.
No, it's the ones you trust the most sometimes. So yeah, just be on top of that.
Number 3, acknowledging prohibited political activity. So part 4 of the 990 is a whole section on required schedules. Line 3 asks the question, did the organization engage in direct or indirect political campaign activity on behalf of or in opposition to candidates for public office? If you answer yes to that, it is a trigger, because participating in political activity like that is strictly prohibited. You also have to be aware of any of your lobbying activity. If you have lobbying activity, it has to be reported. And if there's excessive lobbying activity, again, IRS is gonna look at this very carefully, and it could lead to an audit. So one of the things, watch for your association dues, because very often association dues have a component of some type of political lobbying, or maybe some type of lobbying activity that needs to be separated out and reported on the 990. And again, truthful answers to all questions is necessary. We can't stress it enough. Even though it's a yes and it could lead to an audit, document it as to why, what happened.
Okay, one.
I love this one. Unrelated business income. So unrelated business income is income an organization generates from an ongoing activity that's not directly related to your mission in the form of a trade or business. So what does that mean? Let me give you some examples. And we see a lot of these in our community.
We do.
One of the most common ones is we see not-for-profit organizations that open up a cafe. And that cafe, the profits from the cafe get filtered into the not-for-profit. That's unrelated business income. So that needs to be reported. And I'm going to talk about how it gets reported in a minute. Another example, advertising. If you're doing advertising, that also is unrelated business income. And I think one of the trickiest ones is rental income. If you have debt financed property and you are renting office space or lease, storage space or whatever, that's actually unrelated business income, and it needs to be reported on the 990T. So you need to make sure, and if it's significant, if it becomes significant, it could affect your not-for-profit status. Most of it, the IRS just wants their money. They want the tax from it.
Yeah. And I would say most of our clients are very proactive of this. Like, listen, we're thinking about doing this such and such activities. Can you look into it and see if we'd be subject to UBI and things like that? And like Elaine mentions, like, if it's related to the mission, like that's kind of, you know, what we're trying to look at and
Right.
to try to escape the UBI.
And it's regularly carried on.
Right.
So you do something that's a once in a while type of thing, that wouldn't be considered unrelated business income. It's something that you're doing on a regular basis.
Ladies, a few questions have come in.
Right.
Excuse me. Oh, more questions. Okay, so we just started using alternative investments and now have K1s, which have resulted in unrelated business income. Is this a trigger?
Go ahead.
Yeah, I was gonna say, well, first it depends on the amount, and a lot of the times that's considered investment income, so.
Yeah, you really have to look, you have to look at the K1 and see what type of income it's generating and then make a determination. But if you do receive those K1s, make sure you forward them on to your
Yeah.
CPA.
Okay, the next question is, does political participation allowability vary from state to state? Legislative, education, and promoting legislation that would help the populations served is imperative, ensuring that funding continues to align with the mission of every nonprofit. So does political participation allowability vary from state to state?
I would, it may be from state to state, but federally, it's not allowed. So that's gonna, I would say that's gonna trump it.
Right. And yeah, I mean, well, the requirements for
Yeah.
reporting in every state is different anyways, so, but we're basically talking about the IRS.
Yeah.
Anything political there is.
Again, it's all in documentation of what you're doing.
So this next question might lead into it. So can you speak to the differences between lobbying and advocacy with respect to meeting with elected officials?
Yeah, so, I mean, I have a client that has lobbying activities in, for example, they have dues and a portion of the dues that get allocated to lobbying activities. So we have to disclose that, and there actually is like additional schedules and forms that you have to complete for the lobbying, but it's related to the mission. And it's not strictly political, it's more to, so for example, if the organization was, say for residential improvements or something like that, and it's a group that gathers together to make this type of residential improvements, beneficial for a certain group, then that's something different than like supporting a political campaign. There is a distinction, and I think you really have to look at the mission and whether it's for strictly political purposes or if it's for the organization's
Mission,
Right.
because I mean, you really have to have a good relationship with all of your elected officials, because you're going to be asking them for money. And is that I would say is advocacy. You're
Right.
advocating upon, the organ or the person to be able to fund you, where lobbying is you're trying to affect the laws. What's happening with your organization by law.
And it's very common for well, not all of them, but the majority of organizations to have lobbying days, to make sure they're meeting with their officials and this and that, but that can't be the main focus of it and where the money's going to support legislator A, because whatever, it's more, for the mission. So, there are some distinctions and things. So, yeah, kind of not a clear subject, but.
Okay, we have some questions about rental income. So a nonprofit owns a townhouse that we intend to use as a physical office. In the meantime, we have rented it out and I also live in the basement. Is that considered unrelated business income?
Is it debt financed? That's the question.
Okay.
So if it's debt financed, then yes, it would be unrelated income.
Debt financed by the
If it's
nonprofit.
debt financed.
Mortgage loan.
Is the rental income only considered UBI if the property is debt financed? What if the property is owned outright by the nonprofit?
If it's owned outright, it's not a problem. And why the IRS has that distinction is one of the great mysteries of the IRS.
Okay, the next question is, we've been asked to attend golf tournaments or dinners related to political candidates. Those two would be considered political contributions.
Like
Dinners
the dinner.
and golf tournaments related to political candidates.
I wouldn't, you know, it's kind of a little gray area. I wouldn't consider it, I mean, you're really there usually for advocacy.
Yeah, if it's just a general donation towards their campaign. you know.
Right, it's campaign, yeah, so it's more campaign, you know, it's more like, you know, here's, $1,000 for your campaign. If you're there to participate in a golf fundraiser, I mean, you're there for, I'm thinking of what I would be. I'd be there for multiple things, making contacts, talking to people, being out in the community. So you'd really need to look at what your purpose there is for and document it. Make sure that you say, this is why I attended. These are the people that I talked to.
Okay, next one. Very good. We pay dues to an organization that hires a lobbying firm.
Right, yep,
Would that be something we need to report here?
absolutely. Absolutely. So you need to, very often the organizations will give you the amount, they'll provide you with the amount that's considered lobbying activity so that you can put that on your 990.
Okay, so the next question is, as we are under the $50,000 income bracket, I assume that means revenue. Sometimes we outsource childcare and transportation for our camps. Should we be giving those persons 1099? So for outsourcing the childcare and transportation.
Yes, so their gross receipts limitation has nothing to do with if you have to issue a Form 1099. A Form 1099 is for expenses that the organization pays. Anybody that you've paid for a service over $600, you should be issuing the Form 1099. Doesn't matter if you're a postcard or a 990 easy or a full 990, your receipts and the amount of income that your organization has no bearing on it. What determines it is how much you're paying this vendor. Like I said, $600 is the baseline there.
Okay. And that's all the questions for now.
Okay, so we'll move on to the next one.
Nice active audience.
I
Thank you,
love it.
everyone.
Thank you. Keep them coming. Acknowledging excessive benefit transactions, which is disqualified persons. So what the IRS is looking for here, and I'm not going to read the whole slide, is what they're looking for is the organization paying money that's benefiting an insider, and they're either overpaying for goods, services, compensation. So they're really looking for items that are in excess. So for instance, look at an expense report. Are they paying a large amount for something? Private jet, yeah. Country club dues.
Right, yeah.
In golf tournaments in very expensive places. So these are all some things that we've seen before. And it's, I want just the very last paragraph. It's really important to note that there's a look back period, and they're looking at, for a 5-year period, for a person that's associated with your organization. So it's not just the current year, but it's also a look back period as well.
And as you mentioned before, it is reasonable compensation because you do have, someone that really is providing a service and they need to be compensated reasonably for that. That's fine. This is just excess is the main word.
This is a big audit trigger, compensation benefits. We've talked about those. There could be personal fines that are levied and then to the board of directors. So there's a couple different ways that you can prevent and ways to avoid this. And first of all, is to make sure as a board of directors, you're reviewing the compensation and benefits, not just the compensation, but also look at the benefits to see if they may be determined excess. Excess is a little bit subjective. What's excess for one organization might not be for the other. So you really need to be comparing your organization to others that are very similar to you. Conflict of interest policy. It's really important to have a strong conflict of interest policy so that things like this are reported and documented. And the last is make sure that you have a really good, strong internal control. There's my audit. Internal control policy to check expenses, make sure you're looking at expense reimbursements and what's being put through people's expense reports. Next item, unreasonable compensation. The IRS requires salaries and wages to be paid to employees to be limited to reasonable compensation. Again, it's subjective. So it's important to compare your organization to other organizations that are similar in size, similar in nature. Some executive directors of organizations have different experiences and different items that they do that really might make a difference in higher compensation.
Like a CEO versus executive director, for
I mean, I've got an organization, I work with a couple, one organization, two organizations that they really operate more like they have a not-for-profit model that's more like a for-profit.
Right.
So they do have executive director, CFO. So you need to really compare your compensation with others. And this is important because it can also you can lose your status.
Right.
Okay, foreign.
Well, this is one of the questions and statements too
Yeah.
that asked, like, how do you determine the compensation each year? And generally, for most of my organizations, the response is, the board of directors reviews it annually and compares it to other salaries of organizations that are related.
It is another question on the 990.
Exactly. There you go.
Foreign grant activity. We're becoming more global. There's more organizations that are also participating globally. This is a highly scrutinized area, but again, it's important. Look at that last one. Important to keep accurate records of foreign activity. I had a small not-for-profit. It was one of my friend's daughters. She was teaching abroad over in Tanzania. She saw a need for education funding, so she created a small not-for-profit that was giving scholarships to students over in Tanzania so that they could continue their education. Completely above board, and she never, her 990 was never questioned because it was documented.
Exactly. As long as you disclose and are thorough, you're pretty good.
Fundraising, income, and expenses, discrepancy. So Schedule G of the 990 has, if you have more than $15,000 of fundraising income, you have to complete this form. It's one of the questions that'll bring you over to this form. It's not a common audit area, but it's something that they look at. And what they're really looking at here is if you have a small amount of contribution income or fundraising income and a large amount of expenses. That's where they would look for questions. And that sounds, why would you spend a lot of money to raise this much
That
money?
should be a question as a board member and organization
It
too.
should be.
Why are you doing that still?
Okay, we talked about non-employee services in 1099s, the NECs. IRS does match, so you need to make sure that you report those. And we'll go on. And finally, loan to disqualified persons. I see this more than I would prefer to. Let's put it that way. It's a no-no. You shouldn't, the organization should not be loaning money to a disqualified person, an officer, a director, a high-level employee. It's considered unethical, and in some states it's prohibited by law. Well, it's not federally prohibited, but it is an audit trigger when they see a loan on your balance sheet that's not going down. They're going to want to know why, and that could be an indicator of a prohibited private benefit. So something, if you need, it's kind of one of those things, just don't do it.
You're right.
Shannon, here.
I got a couple questions before you guys hop on to your next section.
Sure.
So we issue 1099s for anything that we use, but what about expenses paid out? For example, a scholarship fund pays $1,000 to a caterer for recognition dinner. The check would come from us.
So they're paying the vendor for catering. Yeah, so if it's for catering, which is a service, and it's over the $600, then, and it's coming from you, then it should be, a 1099 should be issued for that.
If it's a corporation, if it's a corporation, that's the caterer, you don't need to, but if it's a
Correct.
partnership, yep, they're really tricky. You have to look and see whether it's, whether it's a.
Yeah, that's
a
what we say, like the general
LLC.
rules, $600
Yeah.
for services, but there are exclusions. If it's a corporation, if it's a not-for-profit.
Yeah.
It's a shame.
And what do they need to do to find out if the 1099 is issued?
So, there's a form W-9 that you should give to the vendor. And it's actually pretty simple. It's like name, address, there's check boxes for what type of entity they are and their ID number. So once they give that back to you, you'll be able to tell exactly what type of entity they are. So you can narrow down if you do have to issue to them, and then you have all the information right there to be able to issue the 1099 as well. ID number, name and address.
Okay, great. This is another UBI question. We are a nonprofit art school that operates a gallery which splits profits with exhibited artists. We are considering expanding the gallery to include more craft and artisan items made by our students, as well as some branded merchandise like tote bags and prints to support our work. At what point does this become UBI, or is it all related to supporting our mission?
Oh, I love this question.
Yeah.
Example is
actually-
museum gift shop.
Yep,
Yeah.
I was actually gonna use this as an example, but if it's related, you go back to the qualifiers, if it's related to your mission. So in this case, I would say that sounds like it's pretty much related because it's items that are crafted, it's within the mission. If it's something totally outside that, let's say they're selling, I don't know. Can't think of a quick example right now, but automobile parts, okay, and probably not their mission. So it's something definitely that you should look and see, first of all, whether if it's significantly within your mission.
Okay. Are grants included under Schedule Z?
Under schedule what?
G, I don't know.
No, that's.
I'm just trying to stump the presenters here. Are grants included under Schedule G?
No, it's really fundraising activities. So it would be more like your benefit dinners, golf tournaments, your 5K run, things like that.
Okay, and the last question is, we work in countries where sometimes difficult to get the funds in, and so we often send cash to visitors from the US who carry it over for our project purposes. Is that a trigger?
No, it's just something that has to be disclosed where anything for and where the money's going, how much, just disclose it.
Okay, I'm sorry, one more question came in and then we'll move on to the New York State Charities Bureau. Can an individual on their own behalf make a donation to a campaign, in theory, unrelated to the individual's nonprofit, or could the individual's contribution to a campaign come back to the nonprofit in regards to 990 reporting?
So if an individual is making like a political contribution, that's how I'm reading it. And it's not related to the
Yes.
not-for-profit, then
It's
it's completely separate.
It would be separate.
Yes.
Okay, great, thanks.
Okay, I have a few minutes left, so we'll kind of skip through these next few. So New York State Charities Bureau, obviously we wanted to hit on this one since this was our first question. I'm gonna skip electronic filing for Chart 500. Hopefully everyone has been doing this now for the last couple of years, so continue doing that. It's nice to check the status online. But this is the new one that people have started to get notices on. So New York State requires that all financial statements must be submitted under GAAP, or generally accepted accounting principles. Under GAAP, typically that means accrual basis. So there have been certain instances of organizations, I know we've had a couple of clients internally here as well, where they have been kicked back by the Charities Bureau, and they requested that they resubmit the financial statements and the Chart 500 on the accrual basis. So if you are filing on the cash basis, you're lucky if you haven't gotten anything yet, and you keep taking your chances, but just beware.
Just beware, and it could be a gap exception too. So I think over the past few years, we've seen the Charities Bureau becoming much more diligent in looking over the Chart 500s. They're kicking things back. The grant schedule, if you don't have all your New York State grants on the grant schedule, they'll kick it back. Sometimes they'll not accept your CHAR 500, but they don't tell you. And all of a sudden you're going for funding and all of a sudden they kick it back and say, oh, your 2021 CHAR 500 is incomplete.
Well, I will say
notice.
that's a nice thing though about the electronic filing now. And it depends on how you're submitted. So for example, all my clients, I submit the chart 500 under my login. And if it gets rejected or pops back out, oh, we didn't like the response to this question, it kind of contradicts something else in your chart 500, I'll get an email about it. And they send emails every couple of days to remind you to adjust it. But, I think with the electronic filing, it's just, they've just been more thorough and able to do that with it. So, be prepared. You'll probably get more kickbacks and inquiries from New York State Charities Bureau, particularly. Next, really briefly, just because this has been a hot topic and not necessarily for not-for-profit organizations, but this is also our last polling question. So, do tax-exempt organizations have to file a BOI report? Yes, no, or it depends. So I'm curious about this because, like I said, it's been a hot topic, not just necessarily in the not-for-profit world, but other entities, people that have Schedule Cs, little LLCs, this and that. The requirements are constantly changing. It's on again, it's off again. So,
and there's 17 or 18 exceptions. I mean,
20 something, I think, actually 23. Yes,
it's a very complicated report.
Yeah. So looks like they're still coming in, and C, it depends. That's a very safe answer because that is true. It does depend. Okay, so overall, I'm not going to give you the whole background on BOI just because we're running short on time. But this is a requirement that for organizations that have been in place before 2024, the initial rule was by the end of this year, this past year, 2024, you would have to file this BOI. There's been different legislation back and forth, and that filing has been suspended, and then it's on again, and the filing requirement date has been pushed back. Most recently, I don't know, I haven't checked it in the last hour or two, it seems like it's changing all the time, is that it's temporarily suspended as well. Just the whole general reporting in general, but specifically to not-for-profits, like Elaine mentioned, there's a lot of exemptions, but the big main one that I think most of our organizations or our clients will fall under is not-for-profits are exempt for BOI filing requirements. And you'll see that 501c organizations are part of that. Other political organizations, trusts too, but also for new entities, this is kind of important. If you're just starting up your organization, if you get that tax exemption approved within 180 days, you don't have to worry about the BOI report. But for example, like most of them start off as a corporation and then you're applying for your tax exempt status. If it takes longer than 180 days, just be cognizant of that. You might be have to file this BOI reporting if that exemption doesn't come through in time.
Or if you lose it.
Yes, yes. I think that's the next slide, actually.
Oh, sorry. I have somebody
we have to get through.
Yes. So we've got one more polling question. We're going to move on to energy credits. With all the wonderful questions, we're so happy that we're able to answer so many of them. We are running a little bit behind, and we're not going to be able to cover this section, but let's start with a polling question. Can a not-for-profit organization qualify for energy credits? Yes, but only the ITC credit? Yes, but only the production tax credit, or no? Yeah, this is not something super common. You've got great materials in your packet. If you have questions on this, please reach out to either Shannon or myself. We'd be happy to schedule a time to talk about it and how it might affect, how you might be able to take a benefit for this.
And it's more awareness if you're,
Yes.
especially if you're building it, like doing a new building or something like that, just be
Yeah.
aware. If-
Solar panels, electric vehicles. I had a client that was, buying a Prius for their business. And so they got the energy tax credit, but you don't get it in a check. You get it back as a credit when you make the purchase. So answers are mainly B, yes, and that is correct. There's several different credits that you can apply for. I'm just gonna, what's our time?
Fine.
We're fine. Good. It's okay, Chris. You don't mind if we take some of your time?
We've got a break. It'll be fine.
Okay, let's just run down through really quickly the overview of it. You have IRC 45, which is electricity that's produced from renewable sources. That's a production credit. There's the advanced manufacturing production credit. There's the energy tax credit, and then there's an advanced energy protection credit, project credit. Let's go to the next page. I think this is the most important, one of the most important. So how do you get the money? So you're not for profit, you don't pay taxes. So how do you get this back? So IRS has set up a direct pay credit so that what happens is you have to register the project with the IRS. You have to declare it, and it has to be approved, that project. It gets reported on your tax return, and then they send you back the money. So let's say your building has solar panels, you're going to be getting, you're going to have excess solar energy. So you're going to have, somebody else is going to, buy it, or even the cost of installing those. So you get that tax credit back from the government through the direct pay method. Okay, so the 45 credit, this is electricity that's produced from renewable sources. Let's go to the examples. So one back. So this is solar, and it could be geothermal, landfill gas, trash, solar energy, hydropower. So you'll see it's pretty limited in nature. But as a not-for-profit organization, if you're doing a building or you have a project going on, you may be able to receive special funding through grant writers to be able to capitalize on this. The next one. 48 is the energy. This is an investment tax credit. This is the actual materials for that. So like the solar panels, you can get an investment tax credit. So you can either get the production credit or you can get the investment tax credit. So you want to weigh which one's going to be the best for your organization. Qualified energy properties. Again, this is solar, fiber optic solar, fuel cells, turbines, combined heat and power systems. Examples. So this is probably one of the most common is clean, commercial clean vehicle credits. If you buy a vehicle that's an electric vehicle, you can get that credit. The credit's limited to 40,000 and up to 75,000 for vehicles. And what happens with that, again, it's one of those credits that it gets back and it reduces the price of your vehicle or the item that you're purchasing.
Okay. Not gonna say much on this because I actually think this will be more in tune for next year. So just to tempt you, because as we know with the election and everything and the TCJA expirations, I don't know. I don't know if this will be much of an issue, but something more to address next year and changing things. So, and just last, I want to draw your attention to at the end of our presentation, if you request it through our website, we do have resources listed for you. So these are always nice. TechSoup's always a big one, discounted on computer software stuff. So yeah. And I think we have one last question. Does the federal extension extend New York State filing? And just to let you know, there is no technical extension for New York State. It just requires, or it just allows you to do the additional 6 months without filing a form or anything. So.